Okay, hi there, welcome. In this video, we're going to take a look at a few economic headlines, and the challenge in this video for you is to think about whether you think it's likely to lead to demand pull inflation or cost push inflation, or perhaps a combination of both. So here we go. I've put together 7 kind of economic scenarios, economic factors, and might be worthwhile if you're working through this for your notes to take a quick screenshot. Copy and paste into your online notes perhaps, or press the pause button and have a think about whether it's likely to be cost push or demand pull inflation, or conceivably a possible combination of both. So here are 7 economic factors. What type of inflation, what cause of inflation do you think is most likely to happen as a result of this? So let's take the first one. Global copper and zinc prices climb higher as the world economy starts to recover from the pandemic. What type of inflation do you think that is most likely to be? I would argue that it's probably going to be cost push inflation. For the UK, we don't produce copper and zinc in any significant quantities, and if the world price goes up, it's going to cost us. Those businesses that use copper wiring, for example, and zinc, the businesses that use copper will have to pay higher prices. This is interesting. This is the world price of copper. An index of copper and gold prices actually rising sharply in 2021, as well as an increase in the bond yield in the United States, perhaps a sign of rising inflation. And indeed, the FT reporting in the late February 2021 that copper had breached $9,000 a ton, as speculators were moving in the market and buying up available stocks, anticipating perhaps an economic rebound globally, and also taking advantage of some supply scarcity. What did you put for the second one? Surge in house prices causes an increase in consumer borrowing with extra loans secured on property. Most likely, I think, to be demand pull inflation. Yes, it could lead to increased wages, increased raw material prices in the construction sector, especially if more homes are being built. But you see, if house prices are going up, that could lead some house owners to extend their mortgages, perhaps release some of the equity in their house and increase their spending, perhaps to fund home improvements. Likely consequence of that is an increase in the rate of demand pull inflation. House prices, according to Reuters, again in the middle of February 2021, are now increasing at the fastest rate in 6 years. And of course, supply tends to be relatively inelastic, at least in the short term. What about our third factor? Exit from the European Union causes a steep decline in net immigration of workers into the UK. My instinct is this would be a potential cause of cost push inflation. Often industries such as construction and care homes and farming and tourism, they rely heavily on migrant workers coming in, often seasonal workers. And if there's a fall in immigration, that could cause labour shortages and perhaps require employers to bid up the wage rates, leading to higher cost push inflation. Here's an article from the FT suggesting that flower growers have been hit. Flower growers, daffodil producers, have been hit hard by post-Brexit labour shortages. Indeed, many farmers warning they may have to leave their crops unharvested because they can't secure enough fruit pickers and flower pickers. On the other hand, another story, back in the summer of 2020, the UK government is likely to give migrancy rights to several 100,000 people from Hong Kong, so that would potentially increase our labour supply in certain industries. The fourth factor, government announces tougher regulations designed to control pollution. So that would increase, presumably, the regulatory cost facing businesses. It may well increase their cost base, and that could cause higher prices. There is some thinking, by the way, that the government, which needs to raise tax revenue, given the size of the budget deficit, may well have to introduce some new taxes. Perhaps we may be moving towards some sort of carbon tax, conceivably to replace the carbon trading system. So a carbon tax would add to costs of many businesses across the country and cause cost push inflation. Our fifth factor, what did you get on the fifth one? Well, I think the pound depreciating, let's say 5% against the United States dollar and the euro, perhaps on rumours that interest rates are going to become negative, and that could cause an outflow of hot money. A fall in the exchange rate, in theory, can cause both demand pull and cost push inflation. Cost push because the prices that we pay for imported goods and services will go up, for example imported food or imported energy. But equally, a fall in the pound typically leads to a growth in export demand and sales, an increase in aggregate demand, and again, that could lead to some demand pull inflation. Much depends, of course, on the scale of the fall in the exchange rate and when it happens. So it's much more likely to occur in the boom phase of a cycle. Now, the two more factors. 6, I tried this with my students at school, and it was a tricky one. The government removes a temporary subsidy paid to the steel industry to help them compete with low-cost steel from China. What type of inflation might that cause? What did you think on that one? Well, I think the answer is probably cost push. You see, a subsidy lowers costs and prices, and perhaps you can visualize in your mind a supply and demand diagram where you could show that. Removing a subsidy adds to costs and could cause steel producers to have to increase their prices. Now, the last one, what do we think? The Low Pay Commission recommends a £1 increase in the national minimum wage for all adult workers over the age of 25 years. What kind of inflation, what cause of inflation might that cause? I think the answer to that question is probably both. Probably both, in the sense that a higher minimum wage could increase labour costs, which could drive service businesses, in particular labour-intensive businesses, to have to raise their prices. And of course, if it led to higher disposable incomes from in work of people on relatively low incomes, that would cause a rise in aggregate demand, which in theory could lead to an increase in demand pull inflation. Again, the evaluation is to challenge and question whether that would actually happen or not. In the next video, we're going to spend a few minutes thinking about where next for inflation. I'm recording these in 2021. Some people are suggesting that inflation may well increase in the UK in the next year or two. So we're going to cover that, and at the same time take a look at the Bank of England's forecasts for inflation.